Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Wednesday, August 15th, 2018. And here are some of today's trends in the news. Not a good day on the market front. Over there in Asia, everything's down. And that Shanghai down another 2%, getting deeper and deeper into that bear territory. Taking a look over there in Europe, everything's down over 1%. Take a look here in the States. Dow was down way over 300, closed down 137. NASDAQ down 1.23%. Oil's down, and gold took a hit, down 18 bucks. The only thing up is a little bounce of Bitcoin. Equities fell amid lingering worries about Turkey's financial situation. Hey, wait a minute. Yesterday when the markets went up, this is today's Wall Street Journal. Turkey fails to trigger wide sell-off. Well, today it triggered a wide sell-off. What else do they say? The emerging market issue. Emerging market recovery buoys stocks. Boys, you know what that boy is.
Warning, warning, bullshit alert.
The rebound from some of contagion fears as cooler heads prevail. They quote this guy as saying. Well, cooler heads didn't prevail today. And of course, one of the other reasons it went down was that Macy's didn't do so well, and some tech stocks didn't do great either, particularly the one from China, Tencent. Dropped 6.7%, Macy's dropped 16%, and Apple, Alphabet, Facebook, and other Chinese stocks, they also went down on the tech end. Emerging market stocks took a beating. The iShares MSCI Emerging Markets ETF dropped more than 2.9%, and now it's in bear territory. That means it's down more than 20% from its 52-week high. So, where are we going with this? Very simple. It's right in your trend alert. Your trend alert. Economic terror strikes to sink markets. Yep, and that's what's going on. There's wars where you drop bombs and kill people. There are cyber wars when you take out entire grids and cripple corporations. And then there are sanctions, which are economic wars. And that's part of what's bringing these markets down. But it's much bigger than that. A big part of it, of course, is those rising U.S. interest rates. And that's why gold is going down. People think gold should be going up because of the financial crises going on with the emerging markets and watching all their currencies plummet to historic lows, yearly lows, and double-digit lows. What those central banksters are doing down in those places where their currencies are going low are they're selling gold to prop up their currencies. That's what happened, by the way, when you had the 1997 Asian currency crisis. Gold prices didn't go up. And they're not going up now. People think they should be because there's an EM crisis, an emerging market crisis. No. Gold is dollar-based. Their currencies are going way down. How are they going to buy gold? You had an inflation rate going on in Turkey this year, 101%. Down in Argentina, 30%. Around the world, you're seeing double-digit inflation. So they can't afford to buy gold in their currencies because things are going down. Now, what will bring gold back up? Maybe the same thing that's bringing the emerging markets down. Possibly, the Fed will not be raising rates aggressively this year. And if they don't raise rates aggressively, then those other currencies get stronger, the dollar gets weaker, and gold prices go up. And we believe that gold is near its bottom now. I thought it was around 1,200, and I said give or take. Well, it took a little more than I thought, but we believe gold is near the bottom for a fundamental reason as well. It costs about $1,200 to pull it out of the ground, from Peru to South Africa, you name it, when you average it up. So they're not going to be selling it for what it costs less to mine. And oil prices went down, hitting a 2-month low after government data showed a big unexpected jump in stockpiles of U.S. crude. Now, you compound that with the fear of a slowing global economy. Chinese growth engine sputters. We've been talking about this. As China grids for an escalating trade fight with the U.S., it's facing increasing trouble on the home front from a slowing economy. It has nothing to do with a trade fight. The Chinese economy has been slowing. It's been pumped up with cheap money. They got a debt-to-GDP ratio of 300, and they got real problems. Spending on so-called fixed assets such as factory machinery and public work projects cooled to the lowest point in nearly 2 decades. That has nothing to do, of course, with tariffs or trade. And retail sales grew, but not as sharply as analysts had expected. And the bank is pumping more money in. Beijing is encouraging banks to open up the lending spigots as it seeks to shore up its economy. Again, here they go again, for what could be a long trade fight with the United States. It has nothing to do with that. Their economy is slowing down because it's pumped up artificially. So, but they want to keep bringing the trade fight in. Spending on fixed assets, investments in non-rural areas grew 5.5% in the January-July period from a year earlier. The figure matched a record low in 1999. Has nothing to do with trade, but that's how they're distorting the picture, trying to make it something else. And that's why you get the TrendsJournal and your Trends Alerts and your Trends in the News to get the truth in trends, not the hype from the prostitutes. Hey, missed payments renew fear over Chinese debt. Oh, that too, huh? Beijing, a missed bond payment by a quasi-military organization in the autonomous region of Uyghur is fueling fresh concerns about China's ability to shoulder its massive debt. Has nothing to do with trade. But they keep bringing it in. German shoppers spur Eurozone growth, but trade war fears linger. Fears aren't a reality. There is none yet. There isn't a trade war. But they're saying that. But it's only Germany where you're seeing the growth, and it goes back to a slowdown in the global economy. Fabio Balboni, analyst at HSBC, said in a note that previous data from France, Italy, and Spain, quote, all point to very subdued growth in private consumption, but that Germany presented a slighter, rosier picture. Domestic demand appears to have done most of the heavy lifting. So, it's the Germans that are doing well because, as Paolo Savona, who the Five-Star Movement and Lega League in Italy, when they took over the government, wanted to put in as finance minister, he said, all of Europe has become nothing more than a colony of Germany. And here are the facts. The Germans are manufacturing and exporting because of the cheap euro. If they had the Deutschmark, they would never be exporting the volume that they are now, because that Deutschmark would be way up there rather than the euro losing ground against the dollar. Here in the States, U.S. retail sales rose more than expected in July as households boosted purchases of motor vehicles and clothing. But the Commerce Department also said that they revised June's number down from gaining only 0.2% instead of the previously reported 0.5% rise, and that's what it rose also in this latest number. But where's the money coming from? Household borrowing hits new high. Gradually rising interest rates have yet to dent American appetite for borrowing, with total U.S. consumer debt climbing to $13.3 trillion in the second quarter. Debts rose by $82 billion in the second quarter, driven by rising mortgage, credit card, and auto loan balances. Total debt is now higher than before the financial crisis. Household debt is now nearly 20% higher than 5 years ago. And what does it show? Weekly mortgage applications drop as home buyers drop out. That's right, they fell 2% for the week. Volume was 19% lower than the same week 1 year ago when interest rates were lower. Goes back to the debt, goes back to the global problems going on. The debt load is a burden, and it's very hard to deal with. So they're borrowing their way into prosperity, whether it's the consumers or China. And what else do we have here? UK treats Westminster car crash incident as terrorism. British police have arrested a man on suspicion of terrorist offenses after he crashed a car into security barriers outside the House of Parliament in central London. A number of people were injured when a silver Ford Fiesta collided with cyclists and pedestrians. At 7:35 a.m., 3 people were treated by paramedics, although none of the injuries were thought to be life-threatening. And look at the coverage the New York Times gives this. Wow, huh? How's that for a photo? Hey, but how about those 50-plus Yemeni children that were blown into little pieces by the Saudis, our allies, who the United States and the UK, or is it the FUK? I don't know. Maybe yes, because they're all selling them the weapons to kill the innocent people. They are accomplices to murder, but no coverage, virtually no coverage of the ongoing slaughter in Yemen, the worst humanitarian crisis going on in the world today, according to the United Nations. But 3 people injured, that's big news. Because it's the UK, it's not in the Yemen. Afghan push to oust Taliban stalls. Yep. It keeps stalling, doesn't it? And that's what we're saying. Day after day, you're seeing more and more news of Afghan Army's last stand at base offers look at perilous conditions. You see how they're talking negative in the press? How the prostitutes who kept propping us up for war with their propaganda, prostitute propaganda, getting paid to put out for war, and now they're getting paid to show the slowdown. Remember our forecast. It's not only in Trends in the News, in your Trend Alert, but also your new Trends Journal that's going out tomorrow. We are forecasting that there will be an end to the Afghan and the North Korean war before the midterm elections. It'll be a Trump card. That's right. And that's a card that's a good card for occupying peace. Because what he's going to do, bring home the troops, put them to work rebuilding our rotted infrastructure, taking out the second platform of the Occupy Peace Action Plan, the Troops Progress Administration, a takeoff of the old WPA, Work Progress Administration, during the 1930s, where they put the people to work to build our infrastructure. Trump is going to put the troops to work to rebuild our third world infrastructure. This is Gerald Celente, and that's some of today's trends in the news.
So great.